Hey, what's up, guys? This is Mario from Trade of the Day. Now, in today's video, I'm going to go over the market. Is the market ready to make a next move? And I believe the FANGs are leading. And I'm going to talk about what I like. I really like Facebook for a swing trade. I'm going to go over why is that. And I'm going to go over some market indicators. All right, let's get started. You guys know the FOMC meeting or the Federal Reserve announcement was today. In terms of interest rates, it stayed the same. So consensus was 1.5 to 1.75 percentage points, and they announced that we're going to keep it the same. So according to the Federal Reserve, inflation has stayed steadily, and it actually did hit 2% for the first time in a couple of years in March. It is holding, and again, their target rate for inflation is 2%. So far everything's looking good. So that's good news. So they didn't have to really change it. Again, the Federal Reserve is closely watching interest rates to make sure, inflation to make sure it doesn't overheat. And if it does, that's when they're gonna have to step the pedal and start increasing interest rates faster than normal. But so far everything looks good. Now, what I do like is, liked about that FOMC meeting was that they kind of told and try to calm the markets that everything looks good so far, nothing out of normal, nothing to be afraid of. So the market did react pretty nice after that. You guys can see there was some uptick in volume. But for whatever reason, there was a little sell-off at the end of the day, which was really odd because everything looked good. But I believe a lot of that has to do with Friday's jobs report. So on Friday, we do have a jobs report, at 8:30 Eastern time, which again, the jobs report is really important because that is how the Federal Reserve dictates if inflation is getting out of control. Based on increase in terms of non-farm payrolls and also average hourly earnings month to month. So right now, the consensus is 190, and the range is between 145 to 225, 255,000. So if for whatever reason this number is above 255,000 non-farm payroll jobs, then I believe the market is definitely going to be a little worried. So I really believe that's the reason why the market sold off, because they're not exactly sure how this number is going to be. Again, as long as it stays between these numbers, it's going to be fine. Also, average hourly earnings, as long as it stays at 0.2% or anywhere between 0.2 to 0.3%, everything's going to be fine. The only thing I will be worried about if it's above this. If all of a sudden you get like a 5% month to month average hourly earnings increase, or 6 or 7, then inflation, and then that's definitely inflationary, and that could definitely move the market, and not in a good way too. So we're gonna have to wait for that. So far everything looks good. So I wanted to cover the FANGs, and specifically Facebook. Facebook is looking pretty good for me. I kind of do like what it's doing. After the whole controversy with British Analytica, it just kind of sold off, bounced back, and it literally after this earnings, we saw that there's really no change in terms of earnings, and actually they beat earnings by like almost 20 cents. So things are looking good. According to their I guess conference call, they said there was really no big changes in terms of user activity and things like that. So that's good because of course investors are watching that. Now, what I do like about this is that again, the market as a whole looks good. The Nasdaq looks decent. And now after this gap up and strength, we kind of seen that it might start trending again. And again, why is that? For one, the market looks poised to make another move. The Nasdaq is holding its higher low levels. and so is market as a whole. It's holding higher low levels. And the FANGs are starting to lead again. So the Facebook, definitely a huge part of the FANGs. And what I like about Facebook is it actually represents a big component of the market. If you look at the S&P 500 or the Spiders SPY ETF, the four biggest, I guess, positions or holdings in the S&P 500 are Apple, Microsoft, Amazon, Facebook, and JP Morgan Chase. So Facebook being the fourth at 1.84% of the whole market. So when Facebook moves, the market's going to move. So, companies, large investment organizations tend to put big positions on bigger weigh-ins in the company, like Apple. Now, what I really like about Apple's earnings report today was it actually beat expectations in many ways, and actually beat earnings and beat sales, and it actually there was a huge concern that actually that the iPhone 10 was not going to sell, not going to sell enough phones or units, and it actually beat consensus or beat analyst estimates, which is really good. So that's why it was up 4% today. So things are looking good. You have Apple starting to move. You got Facebook looking at starting to move. Now we're looking for the other FANG. So Amazon had a little bit of a pullback after this earnings report, but it's starting to kind of hold, starting to hold these levels. And then you have Netflix over here, again pulled back from its highs, but it's starting to hold and starting to trend. We had this huge buy and this hammer right here, and then you also have Google. Creating higher lows, so it looks like it's poised for the next move in terms of the Nasdaq, and even like other companies, NVDA and things like that, looking good as well. So that's what I like about the market. So because of that, and Facebook, I really think we're looking for a next move very, very soon. And if you look at the moving averages, the moving averages are really looking really good as well. So if you guys can see, they are all above. It's above the 200-day, it's above the 50-day, and it's above the 9 EMA, which is very, very important. And I wanted to show you guys this chart of Facebook. The last time Facebook was below its 200-day moving average, or even 50-day average, I want to kind of show you what happened. What was the move after that. So again, keep in mind, right now it was below its 200-day, and now it's above. Last time it did that, this is what happened. And this was actually around November, December of 2016, 2017. Again, Facebook below its 200-day. It consolidated, it held, and it broke out of the 50-day, 90 EMA, and 200-day. And we had this nice run right after that. So that's what I'm looking for. I'm looking for this type of run, on Facebook. So as long as the market looks good, we have a normal job market reports, that could happen again. So everything's looking good so far. Again, we're looking for a similar move that happened back in 2016. That's what I'm looking for. And if you guys could look at the chart, every time it does go below the 200-day moving average, you guys could see actually this is when it first went public. So it does tend to give a pretty nice run after that. So that's what we're looking for. We're looking for some sort of run like this. Again, this happened. This type of a sell-off happened in 2016. It held and it started a trend. So we're seeing something similar here, went below 200-day, and now we're looking to look like it's gonna make its next move. So that's what I'm looking at, guys. Again, so far everything's looking good. As long as the market starts to trend, nothing out of the ordinary, and Friday's job market report, I really do see Facebook trending. But then again, things could change. There's a lot of, I guess you could say, geopolitical risks out there. That's the only thing that I could see causing more volatility. But besides that, everything looks good. All right, guys. Well, hope you learned something from this video. Take care, guys. Feel free to reach out to me if you have any questions, and you guys will hear from me soon. Have a good one, guys. Bye.